Hey guys, it's a market update. In this video, I'm going to show you exactly how to track the most important thing in crypto, which is liquidity. I'm going to show you the indicators I use. These are free. And also we're going to look at some analysis on liquidity, because if we know where liquidity is going, generally, we can have a fairly decent idea of where Bitcoin and crypto prices are going. There's a massive correlation here between liquidity in the market and the price of Bitcoin and crypto. So let's have a look at the relationship here and how to track it. What's going to be happening over maybe the next 6, 12, 18 months, right? If we know where liquidity is, maybe we can have a good idea of the direction of travel of crypto prices. Bitcoin this year, after the bottom, after the kind of bear market capitulation, which we could say was probably this. We've had these three impulses, right? Impulse, draw down to a support. Impulse, draw down to a support. Impulse, draw down to the same support. Are we in an uptrend? Not in my opinion. This is a low. This is a higher low. This is not a higher low. So we are not in an uptrend right now. We are in a consolidation period looking for the next move. What is going to happen in between that time though? Let's have a look at that with this data from Bloomberg. Before that though, if you are a trader, go check out Bybit. You can get a deposit bonus if you're a trader. Link in description. Make a deposit, trade up to $30,000 you can get as a deposit bonus. Check the link down below for the details. Liquidity is the thing that's going to drive Bitcoin and crypto to that next level, right? The impulses in liquidity up. Up until that point, before that liquidity is introduced, then what the Fed is doing and other central banks is actually taking liquidity out of the market. So that general regime isn't the best for BTC. However, what we've seen is these liquidity injections. The banking crisis, liquidity injection. And so let's see how things are going. You can see, according to the analyst, right, Jamie Coots from Bloomberg here, although US liquidity index is a little bit higher recently, it's simply whipping around in a sideways range, and therefore signals are basically noise. Unless there is a meaningful push higher, which would likely come with a policy change from the Fed, not likely in short term. What's he saying? The Fed is still going through quantitative tightening. So they're not pumping any markets with liquidity. The prices of things, especially Bitcoin, is not really going to pump higher until they change. So when are they going to change? And is that actually good news? You can see how liquidity forces prices up and down, right? This is Bitcoin up here. You can see 2019, 2020, huge liquidity injection, which pushes Bitcoin right up to that all-time high. You can see how liquidity just went straight up here. That was the Bitcoin bull market, the last one we saw. As the Fed draws down liquidity, this is US liquidity, so different to world liquidity, but Bitcoin is valued in dollars. Fed is the most important central bank. You can see that here. As Bitcoin prices fall, liquidity is falling off. Now, what we've seen is a fairly static sideways move in liquidity. You've seen a fairly decent recovery for Bitcoin. Liquidity is going to drive the price of BTC. So you've got two things. You have natural network growth, which is dull and boring, and it's going to go up 25% in a year, and that's like terrible for Bitcoin because everyone expects like 500 to 600%. You've also got a massive liquidity injection, which will pump the price of Bitcoin by 200, 300, 400%. It's not really great news, because if the Fed is having to inject liquidity, it means a huge recession, a massive fallout from that, which you have to go through first. So be careful what you wish for when it comes to liquidity injections. What I would suggest is the best thing is slow increase in liquidity over time. That's going to take a very long time, years, right? Rather than some short thing. So if you're in Bitcoin, you're definitely in it for the long haul at this point, because I don't think liquidity is coming back in any big way unless there is an excuse to bring it back, which must be a recession and extremely low growth or negative growth. So we have to go through that first. If we don't go through that, it's going to be a long chop. As we can see here, negative and positive momentum of global liquidity in this case. So this is global money supply at the top. You can see it is recovering from a huge drawdown. So 2023, 2022, we got the massive injection, and now we've had a huge drawdown in world money supply. Now, the momentum is actually turning positive again. A little bit. You can see that here. So it seems to have bottomed. That negative momentum seems to have bottomed here, kind of a double bottom, moving up into positive, but it's still negative, right? So things are changing very slowly. The cycle is changing very slowly, but it's still not bull market occasion, right? Which is why you see pumps in the price of Bitcoin sometimes getting sold off because the liquidity just isn't there. It's not free flowing right now. When the liquidity is free flowing, that's your bull market. Any bit of news, anything, if someone coughs loud enough, the price of Bitcoin goes up because there's just so much liquidity. So I'll tell you when that's happening, and you want to make sure that you time that as well if you are looking to trade Bitcoin, to make sure you're not stuck in at the top when things turn negative again. Here's how to track global liquidity for yourself. You can do this for free. Go over to TradingView. TradingView is free. Just sign up with an email address. I'll link them in the description if you want to get there a bit easier as well. Then we can go to an asset that we want to look at. I'm just going to choose Bitcoin here. And then we go to indicators and then just type in the word global, or you can type in the word liquidity. These are community scripts. So this one, global net liquidity here. You can also see global monetary supply and then global liquidity. I've got net liquidity and M2 money supply ticked on right here. And you can see how this affects the price of Bitcoin. As things move with global net liquidity and money supply, so does BTC. So what we are doing right now, I believe, is coming out of a massive drawdown, going into a period of sideways action before potentially moving into a period of expansion in net liquidity again, if things slow down like the central banks are predicting. Meanwhile, the actual networks are growing, and this is what we have to look at because we know monetary policy now, right? It goes in cycles, they take some out, they pump some in, fiat currency debases over time. That's absolutely guaranteed. It's happened since dawn of human civilization. Are these networks growing? This is layer 2 activity on Ethereum. This year, it's been very positive. Even during a bear market, you can see the activity is growing on the L2. So you're expanding the market, lowering fees. That gets more scale, more users. That's good news, right? For a network that's hopefully valued on a network valuation model, right? More users, more activity is good. So this is happening. This is good news. Now I want to look at the Bitcoin growth as well. This is active addresses from bear market in 2016 to 2019 bear market to the bear market now in 2022 and 3. You can see more users over time, so higher lows. This is real growth on these networks, which is ideal. Why do TradFi want to get these assets and actually create ETFs for them? It's because, as you can see here, number one, they've had immense growth, real growth in users and activity. So that's something that people want to invest in. They are also completely uncorrelated to traditional assets. This is a portfolio manager's dream, to have an asset that is growing so fast that has really good returns over 5-10 years, right? That's the timeframes they're looking at, and has almost no correlation to traditional assets. This is a diversification dream for portfolio managers. This is why I'm really bullish on these networks. Like the Bloomberg analyst said, with US liquidity going sideways right now, or kind of fairly negative, you're just going to get these periods where Bitcoin is just going to keep dripping off as liquidity comes out of the market, and there's kind of fears about growth, right? Until it changes, you're not going to get those big pumps. But when do you want to be investing? You want to be investing when prices are lower and liquidity is coming out, or do you want to be paying up, puffed up prices when they're pumping liquidity in? I know which one I would rather invest in, which is just why I'm being consistent here, trying to dollar cost average when prices are lower in these assets that are actually fundamentally growing. If you're a trader, check out the deposit bonus on Bybit up to $30,000. Link in the description for that. If you want to see my latest updates on my research and my investment strategy for the Bitcoin halving and the next part of the economic cycle, I update the Crypto Investor course for free for existing users. You can check the details via the link below as well. I'm James, it's Money TG. Cheers for watching, and I'll see you in the next one.